Welcome to Checks and Balances. I'm Michael Vincent. This is James Blair, and this week, nobody can get a mortgage. What am I going to do?
So Michael, you look out in the media at the moment, I open my phone, I talk to somebody, I'm at a barbecue. Nobody can get a mortgage anymore. You read online, you go, somebody spent $12 at Kmart, they've been declined their mortgage. What the heck is going on?
Yeah, where's the money, Mike? Well, hey, look, we had some new regulation, well, not new, but newish regulation introduced into the market last year called the CCCFA. Let's see if I can get this in one. Credit Contract Consumer Finance Act.
Not bad to get it in two.
Yeah, so look, that CCCFA legislation came in at the end of last year. And really, the fundamental change is that previously bankers were able to, not massage the numbers, but make suggestions, right? So, hey, look,
fudge.
yes.
I'm feeling fudge.
Fudge's not the right word, but, make suggestions around, hey, look, this person spends like this at the moment, but then they're going to buy a house and their spending will change. And that is a natural thing. When someone buys their first home, when they buy another house, their spending habits change. You stop going out every night. You stop going to the pub all the time. You stop going to, out for lunches every single day. And
none of this is true, Mike. When you got your house, I think your lifestyle got more expensive, didn't it?
Didn't it just? But, generally speaking, bankers would be able to say to their credit teams or to their credit managers or, ultimately to whoever's governing them that actually these people are going to change their spending habits. Now they aren't allowed to do that anymore. There are another couple of things that are in that legislation around personal liability for the directors of banks or finance companies if you are giving out loans. That means your head of retail banking at Westpac or ASB or something can get a $200,000 fine personally for writing bad mortgages.
Hopefully they can still get a loan to pay that.
Yeah, so that's kind of, I guess, why you're seeing banks react in this really conservative manner of, actually no, we're going to almost put a freeze on credit and do all of these sorts of things. Now, I guess what you're seeing in the media is the real sensational cases around that, right? Where someone's saying, hey, actually, this person went to Uber Eats too many times and these sorts of things, and now they can't afford a house.
I tell you, if we're talking about my brother Jordan, he definitely needs to ease off the Uber Eats before he buys a house.
But hey, look, and that's the thing, right? And those are sort of the edge cases or the sensationalist cases. If the fundamentals of the lending application are still there, you should still be able to get a mortgage.
So Mike, if I, and sorry to interrupt, if I break it down and go, well, it's getting tougher, I can understand where the directors are coming from around personal liability and going, let's ease off the brakes a little bit. What was the point of the legislation? Why did it get brought in?
Yeah, cool. So the CCCFA legislation was actually brought in to target payday lenders and loan sharks. However, it's very difficult to paint or tar just one sector of the market with a brush. You end up making sort of sweeping changes that affect everyone because everyone reads the legislation as lenders and goes, well, crap, that applies to me as well. So what that means is that banks now have to really critically go through the spending to prove that this person can pay back the loan based on their spending at the moment. And again, that's where you're seeing these cases of, I could get a mortgage 6 months ago, now I can't get a mortgage. On average, we're probably saying they've dropped about, maybe approvals have dropped about 100,000. If I'm just giving you on average across the board.
That's quite a lot of money. But when you talk about the payday lenders and the loan sharks, and you think about those interest rates and people not understanding what they get themselves into. It sounds like the legislation has good intention behind it, where they're trying to make sure that if you take a loan, and same with a home loan, making sure that you can afford it, right? And making sure that you're not going to be in a position where you can't service the mortgage, you get kicked out of your house. Nobody wants that.
Yeah, absolutely. I may be a little bit biased here, but the road to hell is paved with good intentions, James. Now, look, there are a number of different ways that banks assess this, right, to make sure that you can pay this back. But I think a real question here is, if I'm going for a loan or I'm going to put in a mortgage application soon, what do I need to do? Do I have to live off noodles and rice and beans and osmosis and photosynthesis for the next 6 months? Or is this a little bit of sensational media blow up and am I going to be fine?
Yeah, it makes me think about, we were talking to one of our mutual friends, Luke, last week, who was talking about his situation and what he should do to get his next mortgage. And he was like, lads, should I just live off cash at the ATM over the next 3 months? And we're like, Luke, where's the cash coming from?
Yeah. It's funny because I was at a birthday party yesterday for a cousin of mine, she's 3 years old. And
Sounds like a good time.
Yeah, it was. I'm tired today. And I had a lot of people actually ask me the same thing there, or we're just going to live off cash. And I'm like, well, hang on, guys. If you just get cash out in a lump sum and then don't spend anything, the bank's going to be like, why did you get cash out in a lump sum and then not spend anything?
It looks even dodgier.
It does look dodgier, and that's the thing. And even an automated reporting or analysis on your financials, if these algorithms see large sums of cash being withdrawn or regular cash withdrawals, they will flag that to the banker. So what should you do? Now, absolutely, the bank is going to be looking at your spending a little bit more. So if there is scope to trim your spend, yep, you should be trimming those excess spend. But I think what this actually sort of presents, and I've got an example to back this up, is now more than ever, and I don't just want to give myself a shout out here, but I will, it is important to present the information to the bank correctly. The bank is very restricted in what they can suggest and tell you and maybe, recommend to get a deal across the line or to get that mortgage approved. A good mortgage broker who has worked in the bank knows what the bank needs to see. We're not faking any numbers. We are just presenting the information that they need to see, and in a way that they can understand it, and they don't have to give you recommendations to get things over the line. So now it is more important than ever, I would say, to be using a mortgage broker than opposed to just going straight to the bank. And you know the example I'm going to pull out because they're joint customers of ours, but we had customers who have a personal banker at the ASB. They approached the ASB for some lending to buy an investment property and were flat out declined. Now they came to us the next week and we got them around about 1.2 to purchase an investment property approved back at the ASB. So that just shows you the importance of presenting the information in the right way.
I remember talking to that client as well, you should talk to Mike. And they said to me, James, what's the point? We've just gone through this process and it wasn't worthwhile.
Yeah.
And there's your answer of why it's so worthwhile.
Yeah, absolutely. It's just about presenting the information the right way. I come back to it. If the fundamentals of the application are still there, you can still get a mortgage.
Yeah. On a side note, though, Mike, I mean, you mentioned applications or approvals are about $100,000 less, like rough.
I'm basing
average.
that sort of 10% million.
Yeah. Who is this impacting the most? Is it first home buyers, second home buyers upgrading, investment property owners? Who's getting impacted?
Yeah, well, it impacts everyone across the board. I guess equally, unfortunately, is actually the answer to that. What you're probably asking me is like, who is it worse for? Or who is I guess the headline cases? And what you're now seeing is some banks have pulled their pre-approvals and are making people reapply again. So you're seeing those first home buyers who were in the market are now out of the market again, which is absolutely devastating for these guys who have been saving up, doing everything correctly, and are now, due to some legislation, back out of the market. The other impact you're going to see is people who have bought new build properties and are expecting to settle on these in 12 months. They may need to go get another pre-approval. Now, I am already seeing this, which is people go for that second application and all of a sudden the bank turns around and says, sorry, mate, you don't qualify anymore. Very distressing for those people who have committed a deposit and there are penalties if they can't settle this loan at the end. And then the other one, third and finally, the one who no one has any sympathy for, but they represent a big part of the market, property investors with large property portfolios. The increase in cost and spending and these sorts of things, you're really starting to see them be impacted. Oh, and actually, sorry, one more. Private schools, good luck.
Little Jimmy.
Yeah.
When I went around the new builds, I could certainly see that running into some complexity. For those that have bought new build investment properties and they've bought them in the old regime and now they're in this world, what advice would you have for them?
Start the conversation early. Don't wait until the last minute to go get this pre-approval again. You need to be having these conversations with that broker. I'm going to say it again, sorry, not the bank, as soon as possible, so we can start looking at options, looking at where we can put the lending, who's got what products out there that are potentially suitable for you. There's some instances where with property developers, we can actually use a non-triple CFA product to get them to settle the property, and that buys us time to then go, okay, how do we then get you out of this back into a main bank?
Yeah, and the shout around not just going and talking to a mortgage broker, but the mortgage broker is going to understand the risk appetite of all of the different potential solutions,
Yep.
so they can find the right one for you is a really good shout.
Yep.
Mike, the obvious question that comes to mind for me next is this a forever thing? Is it just going to be harder to get a mortgage forever? What are your thoughts?
Yeah, we're already starting to see this be rolled back a little bit in Australia, and generally speaking, New Zealand copies Australia on a lot of these sorts of matters. So there's potential there. My honest opinion is that profits lead to change, right? As soon as the money isn't rolling in, you're going to see some change. So at the moment, you're seeing the media, you're seeing consumers push back on this, but I would sort of start to say that, at the end of March, start of April, you'll probably start to see the banks really try and push back on this as much as they can, because that credit freeze is going to hit their profits, and if there's one thing that bankers love, it's record profits.
Yep, the fat cat. Banks are kind of like moody boyfriends or moody girlfriends. Sometimes that they're your best friend, they want to talk to you, they love you. Sometimes get away from me, I want nothing to do with you.
Have you dropped that wedding ring already, James?
No, still got it on. Look, Hannah, it's okay. But it just goes in cycles, and for those that have been in the market for long enough, understand that. Mike, before we wrap up, last thoughts on CCCFA?
Yeah, look, it'll be here, I'd say probably, it will be here going forward forever. What that looks like is something different. You can probably expect pretty tough credit policy for the next 6 months. After that, maybe expect it to ease off a little bit. But again, if the fundamentals of the application are there, you're not wildly spending everywhere like I do, you should be able to get a mortgage.
Yeah, so if that head is in the sand, pop it back out, start that conversation with a mortgage broker. We'll see you next week. Thank you very much for joining us.
Cheers.